All right, hey, what's going on? Back again with a another video for you today. Apparently, my I'm still testing out Loom a little bit, so I'm actually shooting these videos with software called Loom. I think it's actually been working out pretty well for excuse me, the videos that I upload and then content. So today I actually want to give you a scaled version of how I look at the markets, what I'm looking at, how I trade, and then I want to combine a couple of ideas, a couple of theories to kind of give you like the backstory, the insight to also allow you to be able to go into your own charts, look for these types of setups, look for these types of mitigations, and more importantly, right? Here's everybody talks about special sauce, so I don't have special sauce here. Um, what I will, however, in lieu of the special sauce, what I will tell you and what I will give you is um, specific areas that you can look for reactions. And I don't want to say every day because I'm going to show you an example of where it doesn't occur every day, but it's something that you based upon price delivery, priced on price play based on what liquidity is being sought, the likelihood and the probability of maybe that daily expectation to be met. Okay, so enough talk. Let's go back and you're actually looking at a 5 minute. So what we're gonna do right now, I'm gonna jump up. We're gonna hop up to a 4 minute. Excuse me, 4 hour. 4 hour. Don't mind all the annotation. I would apologize, but I'm not because it's kind of how I make sense, and I keep my head clear about certain things. So within this shaded area, what you're actually looking at, and I'm looking at these. I'm using an indicator that basically draws out like the regular trade hours, the opening gaps, new week opening gaps, new day opening gaps. I've been drawing them on my chart, like the actual going in, picking out a horizontal ray, measuring it out, putting it on my chart. So I'm actually testing this out just to see if it makes it a little bit more clearer. Um, Maybe next week, but there's certain things that I like to annotate. So sometimes my annotation it might get a little messy, but I know what I'm looking at. So, but all right, enough of that. So 4 hour, we're gonna work our way back. So today is Thursday, October the 24th. It's about a quarter to four, so market's still open. So what we're gonna focus on is this bearish candle here. So this is the third candle back. One, two, three. So we're focusing on this candle, and if you notice, it's tapped into the new week opening gap, and the executions just above the executions. Excuse me, is where this candle rests. Now, let me zoom in a little bit so you get a better view of this, and hopefully you'll be able to follow this with your eye. I think it's pretty straightforward. So for anybody that doesn't know, I've used a couple of different trading models in the past. Primarily, I've used basically a power of three from a weekly, scaled down to a 4 hour, and then took that 4 hour structure down to a 15, ultimately a 5 and a 1 minute chart. So you could say a power of three, basically looking at price action, price delivery, and overall structure to kind of formulate trades, right? Um, I have since been incorporating a same structural price action and structural process within the confines of using candle range and candle range theory. So a couple of channels I could think off the top of my head would be um, the Soup Room on YouTube. So if you want like, and there are quite a few. So I'm not advocating that any of the others that I don't mention are bad or don't know what they're talking about. I'm not going to say that. But what I will say, Head and Shoulders, like from what I've seen, and it's just me. Um, if you wanted to understand candle range theory in its essence and what it can do, if not a believer, I would tell you to check out the Soup Room. And I'm gonna leave basically a link for the YouTube channel down in the description below because the guy's phenomenal. He breaks it down. He literally he will tell you what to look for, how and when, and He's got a couple of other videos that kind of go into whether or not you're looking at futures, if you're looking at forex, what and where you should be looking at. So when I started looking at things like liquidity and liquidity sweeps, it kind of somebody asked me, well, you're basically like, in essence, they were telling me like, well, all you're doing is like a candle range, theory. You're looking for candle range liquidity, and I was like, yeah, I guess I am. And then that kind of led me into, well, power of three, candle range, and then the two worlds kind of merged. And then I got to the point where I was like, okay, when and what could I be looking for, and what's going to be probable, what's not, right? So just to kind of give you a backstory on what this is. So now that you have some of that, what I typically look for and I look at is the 6 a.m. candle. Trade futures, we're looking at basically the candle that's going to form. That's not always, but that is likely to either have a closure above or below, have the buy side or sell side swept, the buy or the sell side souped, either or, and then we're targeting the opposing side's liquidity. So again, we're looking at this bearish candle today. This is the 6 a.m. candle from today. Just above basically where you see the execution arrows is the low, okay? And just below these execution candles, you see the high, all right? So again, that's the 6 a.m. candle. So this candle closes at 10 a.m. So here is our 10 a.m. 4-hour candle. And if you notice something, this candle comes all the way down. It clears this 6 a.m. candle, and it closes inside. This is the epitome, which you'll find on the soup room on that channel. This is the epitome of a turtle soup, which ultimately means once you have this model, you're at this point, you're just looking for either this candle, and sometimes it doesn't occur in 3 candles. We still have probably about another 20 to 25 minutes left in today's market before anybody that's trading a prop account, they've got about 25 minutes. My funded futures, I still don't know if you can keep a position open until 5 p.m. I'm not sure. I don't know. I know at one point, I think it was like 4:35 or something like that. I'm not 100% sure. But obviously, if you're trading your own capital, if you're balling like that, like you could hold. But essentially, the turtle soups that occur 4-hour, they can occur in 3 candles. Which again, we would be looking for this high to be taken. Okay, that's the concept, and that's the idea. So there's that move. Let's drop down. Well, actually, I'll put the annotations back up, and then you'll see there are myriad. There are a lot of them, but you can see I've annotated here 6 a.m. candle range low 1024 annotated there, 6 a.m. candle range high 1024. Okay, and you see some things going on in here. So now let's just drop down. We're going to go from the 4, and then I'll take you to the 15 so you can see. Because sometimes the 15, you can see things a little bit clearer, right? So here again, and it's a little bit, it is actually a lot clearer for you to see here. Zoom in here for you. All right. So again, this is our 6 a.m. So denoted here. That's your 6 a.m. high. This ultimately was the 6 a.m. low. And these subsequent 3 candles, this wick through, this level here, and this candle here, basically allowed, well, actually, this bearish candle actually formed your low. Now, you see something here that says 1024 OR SSL. This OR, and I put it here for I'm not creating a new kind of acronym or anything for anything. It just helps me kind of keep things separate on my charts. So OR, when I write out OR, is opening range. Okay. And I know somebody could be looking at this timestamp if you go back into your chart and you're saying, how in the hell do you have like an opening range sell side liquidity at 12:15? We're going to get to that here in a second. Let's just stick with candle range just for a second. Okay. So we get the soup amongst these three 15-minute candles. So essentially, 15 times 3 is 45. So within this 45-minute time frame, this 45-minute time window, this allows our turtle soup to take place. These are the three candles that essentially create that wick that you see on a 4-hour time frame and this closure inside. On a 5-minute time frame, this box that you see is actually a fair value gap that's been left open. There is actually another one down here as well. But the essence of what we're looking at is, again, if you look at the range, I'm going to pinch this down just a little bit so the entire candle range is in the screen here. The concept that you'll find at the soup room, and then the overall concept that I just wanted to use in conjunction with a couple of other things, is the fact that you can wait for the closure inside, and based upon, again, order flow and price delivery, you can anticipate the fact that once you get a closure inside, if the confluences and everything lines up, you can target the opposing end liquidity. Does it always work? It's like anything else that we do. Absolutely not. It doesn't always work. There's a higher probability when you're in line with order flow, when you're in line with the price delivery, whatever liquidity being sought, and whatever mitigation that may be occurring. If you're in line with those things, then yes, it will. Are there times where you're going to have to sit through drawdown or maybe potentially a retracement after seeing basically your position go into profit? Yes. And sometimes it could be for the faint of heart. Now, I would tell you, I basically did some tape reading early this morning, and then this morning I did a paper trade, and then this afternoon I did a paper trade. And I could tell you, you can actually see from here, I was actually getting out of this position. So I'll zoom in for you. And you can see this execution here for this buy on this candle, which was actually the soup. Okay, so this was before actually the 10 a.m. going into 2 p.m. is before that candle closed. So I basically took in this manipulation. Well, actually, I'm sorry. Before this candle closed. So this would have been a manipulation up here. So before this candle closed, I basically took a position. It was on a 5-minute. It was not on a 15, where basically we had price close inside. And I basically just took this all the way back up, and I got out up here on a 5-minute time frame. Now, you might be saying, why would I do that? Okay, so now we'll get into the other aspects. Since we've talked about candle range theory, we've talked about the 6 a.m. 4-hour candle range, the fact that we closed inside and we're targeting this high. Okay, so let's now go back a little bit. And to go back, we're going to go down one more time frame. We're going to go to the 5-minute. And this is where I might lose somebody. Maybe not. But we'll hopefully we won't. And in order to do that, we've got to go all the way back, not just to this morning. We've got to go back to last night, because this is what I meant when I said at the outset, I'll give you something a little bit extra beyond just a candle range where you could be looking for targets. Okay, so we're gonna go back to Wednesday night, 6 p.m. open. Okay, and we've done this before. I've done this with you before. So that is 20, 15. That is 10. This is 15. Okay. So we're going to go from 15 to 6. Okay. And I'm going to make this really big so you can see it, because this is what will start your ability to be able to understand and see certain things in the market as not as they occur, but to look at them not as just like anomalous, like they just happen and you don't know why. Okay, so what we're looking at is we're gonna get all the way to do 5. That's not 6. That's 6. I'm sorry, guys. What are you doing? It is 55. That's 6. That is 15. Okay. Much better. Much better. Much better. All right. So this is our 6 p.m. open. Okay. That's not going to be well, yeah, that's good now. And what we're going to draw out here is, and we're going to label this 6 p.m. OR, opening range, buy side liquidity. That's what we're going to call that. Because this is the wick high, the buy side, the wick high of this 6 p.m. opening range until it basically gets taken out by another candle before 7 p.m. Okay, that's important. So again, opening range, and I talked about this previous, opening range is going to be that first hour. It doesn't matter whether you're looking at the 9:30 open, the opening range technically is going to be 9:30 a.m., 10:30 a.m. That like there's never a negotiation in that. Okay, any range, anything that you're looking at, if you're looking at an opening, a market open, it's always going to be that first hour. So that's what I want to make sure that you completely understand, because without that concept and without that understanding, this kind of just goes by the wayside. Okay, it really does. This is ultimately going to end up being the low. Okay, and you might be looking at this going, well, did you just like arbitrarily come put this over here? No, I didn't, because I'd had this previous and then I took it off of my chart. I wanted it to be a little bit cleaner than what it was, knowing that I wanted to kind of go over this today. So again, opening range, price opens here. Okay, I use 615, or excuse me, I use 415 as market close, because if it's prop funding, if it's a prop funded account and prop firms in general, 415 is usually the cutoff. Typically they cut you off 5 minutes before, so it's really 410. The market remains active and open even with retail futures. It doesn't matter what the asset is. If you're trading through, and I don't want to call them a third party, but if you're trading through a firm, typically 415 is about the cutoff. And like I said, there are a couple that were allowing up to 430, and some I want to say up to 5, but that would seem like they're pressing their luck on their end in terms of exposure, risk exposure. So I use 415, which is usually a good measure, right? And on average, it's about right. Okay, so we go from the closure, body closure, excuse me, to body open. So this is 6 p.m. And if you notice, this candle here, this one here, is 7 p.m. Well, if this is a 7 p.m. candle, I told you the first hour, this is the wick high, this is the buy side, this is the wick low, this is the sell side. This occurred at 6:30. Previously, I also always told you, you're looking for within the opening range. If once that hour is done for the opening range, you're wanting a buy side and a sell side. You'd like to have something that's clear, buy and sell side on either side. Okay, because if you have that, now you have the framework for your first target. Okay, and the target works the same as candle range theory. And it also works the same way if you're looking at a concept of a power of 3. So if you just take those concepts and you look at it from the perspective of which liquidity has been taken, and what am I seeking, okay, in order to understand what's the previous order flow, it'll give you an idea, okay? So here is what that idea is and how all of this ties into today, right? So 6 p.m. last night, we get through the first hour. 7 o'clock rolls around. Okay, great. So the 7 p.m. candle closes inside on a 5 minute. This is basically your PM opening gap or opening range sell side liquidity. Obviously, that's the opening range buy side liquidity. At 7:25, we get a soup. We get a turtle soup. There's that expression again. We get a soup of the 6 p.m. or the opening range sell side liquidity. You're going to close your back inside. Now, how you decide and how you determine you want to take this position is totally up to you. I will show you a couple of things that you could look at right at the outset. And one of the things that you can consider to kind of, one, keep yourself out of trouble. And two, sometimes you may want to let it go. It depends. It's up to you. Okay? It's up to you. But two things of note that happened last night, which would give me reason to just kind of want to wait. Okay? So this isn't necessarily a fair value gap that I'm drawing out here. What this box is going to denote is that that's a volume imbalance. So anytime you see a volume imbalance at some point or another, particularly in this situation, the first thing that I would be thinking now, knowing what I know now, that's another video. That might actually be a podcast episode in terms of like me and volume imbalances when I didn't know and didn't understand. You would think that a lot of times certain things would be breakaway gaps with the volume imbalance underneath, and then you realize that it's going to come back and it's going to basically pair and it's going to try its best to either balance price, or if it does leave inefficient price delivery, it's going to at least come back and pair at some degree, some pairing of orders before it goes away and says, I'm going to come back later, right? So the volume imbalance here is one thing, okay? But if you're not versed in seeing what that looks like, you may have just seen what I used to see right off the gate, which is this fair value gap, which is perfectly fine. Why is that perfectly fine? Anybody that knows fair value, you understand what you're looking for, how to trade them. If you're looking at, basically taking a position off the consummate encroachment or the 50%, you also know that typically the way that it had been taught originally is you're going to put your stop all the way below the low, the third candle. In this case, if you took the consummate encroachment and you put it below, like if you had that to do, you could have. The other idea and concept, which you can sometimes get away with, and I'm not going to say that I did it because I didn't take this position, okay? I waited. I waited. I didn't do anything. You could put it below the original sell side liquidity level because of the soup. You can do that. Is it something you want to do? Probably not. And we'll get to that in terms of what happened today with the 10 a.m. candle, which actually souped to 6 a.m. I'll show you something there, which is why sometimes you don't want to do that, right? But in this case, you would have been able to get away with it because price didn't come below the original sell side liquidity level. Now, you'll notice that I denoted down here. Whoops, sorry. I called this 6 p.m. man SSL. So instead of typing out manipulation, I just put man down here. This is the 6 p.m. manipulation sell side liquidity level. This is the first time I will tell you, and I will say the first time you'll hear me in this video, or not the first time I've ever said it, but the first time in this video, you will hear me tell you, always, if you decide to go into your charts and backtest what I'm showing you, okay, and if you decide you want to paper trade these, or you want to try them out, I'm going to tell you to always, always, always label whatever that liquidity manipulation is. Put a heart like I've done here. You could put a horizontal ray on it. You could put a bullseye on it. You could, draw yourself an arrow with a narrative or an annotation that says, hey, this is the point in which my 6 p.m. opening range was manipulated. This is the low. This is the high. Why? It's important because at some point, and usually that point is the following morning or at some point the following day, or uh, at some point in the future, price is going to come back specifically to this level. Okay? Go, and again, don't believe me. You could say this is hindsight because it happened today. But I promise you, I wouldn't tell you if I haven't seen this over and over and over and over and over. You get the point. You get the point. Okay? Go in your charts, find 6 p.m., find buy side, sell side, and just let the magic happen. Again, does the magic happen the following day every time? No. However, when the magic doesn't happen, it will give you a future target when price is reaching for fair value, inefficiency, imbalance of some sort, or it's literally saying I'm looking for a specific point of liquidity, and you happen to see that sitting there and price hasn't gotten there, but it's headed in that direction. So targets, okay? I know I probably went a little bit too far, but I can't stress that enough. When you see that, that's something that you would want to bring your attention and bring your eye to and say, I wonder why he's saying that. You'll find out. You will find out. Okay? So, enough about that. Enough already. Enough about that. So, I'm going to lock that down on the chart real quick, and I will take this off as well. Kind of keep this as clean as possible, if that's even possible. Okay, so we get the soup here, right? And we kind of roll into Asia. We roll into Asia session. So we get the soup, and ultimately what happens? We do get that drawback into fair value. Excuse me. We get the drawback into fair value. This is a wick, but obviously on a lower time frame, you've got basically body closures. You basically have this volume imbalance to some degree mitigated, okay, before the move away aggressively. So you do have that to some degree in here. But we go into Asia session, but again, that same power of three concept, that same candle range concept, even though we're looking at 6 a.m. to 7 p.m., right? Closure above, closes in, or the wick below, the closure inside, what does it do? It runs back. It clears this buy side. So if for no other reason, and if for nothing else, if you're looking for something on a lower time frame, this is one of the time frames under which, within the right context, you could just take this position and, you can call it a day. So if you wanted to take 2 trades a day and you have basically a specific setup that you're looking for in the morning, you get that one, great. You could be done for the day. And obviously, when the market opens at 6 p.m., that's technically the next day, the next trading day, especially if you're trading futures or commodities, things like that. That would count towards the following day or the next day's trade. You could take that one, or you could take it that night and get up subsequently the following morning and take one in the AM, and then there's your 2 a day. But this is, I don't want to say it's simple, but the overall mechanics of this is simple enough, right? Just to kind of wrap your mind around where we're going from here. Okay. Now, I will tell you that people have strategies for Asia session. I know and have a couple of videos on the channel, a couple of live streams. I've actually gone through positions in Asia. Some have worked, some have not. London session, I probably have a couple on the channel where I've gone through and traded silver bullet for London session and other things. Some have worked, some have not. But overall, I typically, unless it's obvious, okay, unless it's extremely obvious, I just stay away from Asia and London now. Only because there's like I said, there's a deeper understanding. Now, if I have the understanding based on order flow and how price is delivered in the PM session and the subsequent AM session for the day before, and it looks as if from a technical standpoint, price has to reach whatever point in order to distribute, or it needs to accumulate more to collect and then do whatever it's going to do. Like, it has to be obvious, right? With trading the 6 a.m. 4-hour candle and treating that within like the concept of candle range, That's the other reason that would give me, um, let's just say, the ability to say, would I want to take a position in Asia and maybe hold through London up to New York Open if, say candle closed inside the range prior to 410. I came back, I looked at the market. I'm looking for basically the candle range high to be taken. Something like this happens where the sell side gets taken, the buy side gets cleared out, and then we see a run long, like it doesn't come back to try to take out the low again, and it's within that candle range and it's reaching potentially for the high. Would I take it then? The probability and the likelihood might be on my side. I might say, depending on the risk, it might be worth to take, because it's possible, it is possible, it could deliver overnight. It's possible. Or I don't take it, it delivers overnight, and we just say, okay, well, hey, we just chalk that up to experience, because that will happen sometimes too. So you have to be willing to accept that, right? So again, we've had sell side cleared. We've got our 6 p.m. manipulation sell side liquidity marked out. Okay, so what we'll do is we'll just go ahead and we'll get rid of this right now, right? Because that's been cleared. We have already established that that's cleared, and this is now our sell side liquidity point. Okay, you don't have to worry about that. We'll come back to that. As a matter of fact, we can just go ahead and we can pooch kick that. All right, so we're clear that you've seen that they've both been run. Okay, so now we're in Asia. Asia runs. And again, I'm going to say it one more time because I'm going to move this over. 6 p.m. manipulation sell side liquidity has already been marked out. Right. Now what we run into is, I'm trying to pinch this down to kind of keep all of this together so you can see. Right. So we've got our manipulation here. This is our Asia session. Okay. Here's our London session. Okay. So London begins inside the range of the Asian session, right? And then it runs long. So theoretically, you could say, hey, from just the session in itself within London, there is no buy side for Asia, but you've got sell side sitting along with the sell side liquidity level. That's your London high. This is going to be pre-New York. So this is everything up to 8:30. So my measure is pre-New York Open is going to be 8:30. Now, what am I looking for before 8:30? I'm looking for a clear what? Buy side liquidity level and a clear sell side liquidity level. Why am I looking for that? Because it's going to give me a framework to look at and see, just again to reevaluate, because it doesn't matter what I think or where I think price is going. My opinion means nothing, right? I could have every confluence in the world that says, hey, it's going to keep going up, keep going up, keep going up. This is going to kind of at least give me the framework in terms of what's going to happen within maybe the first hour or that opening range, or it's going to tell me what's going to prevail for the AM session as a whole that might be counterintuitive or counter to what I think the delivery is, right? Especially if there's a news event or anything like that. Like this morning we had unemployment, and I believe we had like PPI, right? So what I had marked out was these two levels before 8:30, and I've kept them up here. I didn't even take them off because I didn't know that I was going to be doing this video today, but I had a suspicion that I would. So this is a 7 p.m. candle. This is a 7 p.m. candle, or excuse me, 7 a.m. candle this morning. And I'm going to say right now that I'm going to tell you, full disclosure, that I had 7 p.m. and I had this low. So I actually had two that I was looking at. And I'm going to tell you why I had two. For the very reason back here, I have something that I've been doing that to me is reasonable and it makes sense. And it's how I can stay on an electronic trade chart to see all of the price action, and I don't necessarily go to a regular trading hours chart even during the day. I stay on electronic trading hours. Now, every now and again, I will go back to regular trade hours just to kind of get a frame of reference. But one of the things that I do is once I've denoted what my session is and the session time, I'm really specific about session time. And what I say to myself is anything that occurs, any kind of price action that occurs in between session times is literally irrelevant. It doesn't matter. Meaning, if my Asia session is going to run from 8 p.m. to midnight, if there is a run above Asia session high at 1 a.m., I don't care, and I don't treat that as, oh, you broke the buy side liquidity of Asia, and I don't care what happens. If 2 a.m. rolls around and 2 a.m. Then takes out within London from 2 a.m. to 5 a.m., if that ends up taking out the buy side of Asia, I like in this case, I'm literally going to say, okay, there's no Asian buy side liquidity. That's been assumed by London. So London is going to basically put in a high. Okay? Anything in between sessions, irrelevant. It does not matter. Unless it is something like fair value, which I look at and I attribute to that is where you have one session that is kind of reaching back for you hear the expression a lot of people will talk about like a failed auction. That's where price is basically looking to fill price void. If there's liquidity that's there, if you're looking for a run to accumulate and then distribute, or accumulate and expand, whatever it is. So I look in those areas, which is what I did here, right in between, and I said it might be possible, and sure enough, like that tapped just the bottom of London as a consummate encroachment for this area. Now, am I saying that was a target? No, I'm saying it's sitting there, and there's a potential that exists there. Like it's not arbitrary, but it is not germane to the session liquidity points. There's a reason for it, but I'm not overly concerned unless it's something like I said, a fair value gap. There's an order block. There's some kind of a mitigation block. There's a break. Like it's serving a purpose, but it's not serving a purpose within those times. It might be later in the day, or it may be there to kind of put you off sides from a retail trading perspective. So I'm looking at this and I said, okay, I picked these two levels because the first thing I'm thinking is, okay, we're getting ready to go into 8:30 session. So what point are we looking? Because this is still going to be my buy side liquidity. What happens? So I'm not going to fast forward just yet, but I'm just trying to keep that in view so you can see it. So in my mind, I'm saying, okay, 7 a.m. within London, but that's pre-New York. Everything before 8:30, pre-New York. Again, another level, this is at 7:35. It's still within, but that's still a low, right? But here at 7:55, which is on or about, it's, obviously it's a good, 35 minutes before the 8:30, not the 8:30 open, but 8:30 pre-market. That seems like that's a pretty clear-cut high. Like, there's no mistaking that's a high. And then this is a low, and then I'm still considering this is a low. So what would I be looking for at this point? Either one of these levels is going to give me reasoning to say at 8:30, if 8:30 opens, right, above, which is what this does, this is the 8:30 candle, it opens just above London. As soon as it dips inside, which is what it did, okay, you're now telling me this pre-New York open session is now associated, it's starting, and now it's being associated with London session. You've clearly said, hey, we're coming back inside London, okay? Now we're going to expand above. So now buy side liquidity for London, you're done. It's out the window. You're done. And what is it also doing? So it cleared this initial level that I did have, but I wasn't. I'm not gonna BS you. I wasn't fully sold on the short. I really wasn't. I was a little conflicted this morning. So I wasn't fully sold because I was still looking at this going, yeah, that's a clear low, but this is really a clear low, right? But it's just deeper. But and I didn't have to put this here. I could have literally shot this video and said, this was my low. That was my, I'm not going to do that. I'm not that guy. I'm not that guy because I don't get anything out of that. There's nothing for all of the people that do that kind of bullshit. Like, you don't really get anything out of telling people, I was only looking at these points and I had no doubt in my mind. No, I had reservations. I did. Because I was looking for price to continue long. And you see this red horizontal ray right here? This was this 6 a.m. See what that says? CRL, candle range low. So I, in my mind, was already thinking, hey, guess what? If we close above this horizontal ray, we're going up. Because I'm looking to close the 6 a.m. candle range high for yesterday, for Wednesday. So that's where my head is. That's what I'm looking at. I'm like, no. We're going there. we're going long. Not to be. So that's why this was kind of throwing me like, I'm not sure, right? However, 8:30 opens, we get this sweep, and because it was a high impact news driver, what it ended up doing was it said, okay, I'm going to open, I'm taking the sell side, and I'm taking the buy side at the same time. I'm taking you both. Same candle. Now, this concept goes back to the original concept of the 6 p.m. opening range for a liquidity point. The irony in this, and I didn't put a buy side liquidity here because this wick ended up being my 6 a.m. candle range high for today. So I just left it as the 6 a.m. candle range high. It's a target nonetheless. It doesn't matter. But had this not been in line with the candle range high for the 6 a.m. candle, you would see buy side liquidity sitting here. And the way that I denote those on my chart is, let me just lock this so I don't want to pull anything out of the way. I denote them just like this. Pre 8:30 buy side liquidity. This is how you know that I'm not selling you, and I'm not telling you a bunch of crap that I don't do. That's the way I denote it on the chart. And if you see this, I have 6 p.m. manipulation sell side liquidity 1022. So again, I'm not showing you something I don't do, and I'm not showing you something that's not actively on my John Madden chart. So all right, so let's speed this up a little bit. We're about 40, 42, 43 minutes in. So you get the manipulation short, takes out this, then it takes out the buy side liquidity, and as I said, it creates this. So if this isn't the 6 a.m. candle range high, literally you just see pre 8:30 p.m. buy side liquidity, mitigated buy side liquidity, whatever. And I'm going to put that up there as knowing this is going to be a target, okay? That being the case, if I'm still looking at this level, again, it's the same idea from the 6 p.m. So if we, just for a second, get rid of this, and that's what I eventually did later in the morning, I said, okay, once I was looking at this price delivery here, I said, okay, let's play it out. Let's play it out. Here you could see I took a buy. And that's why I'm glad that the executions are on my chart. You can see right here, I took a buy here. And I said, I wonder, right? Because I told you earlier, I wasn't sold. Because I was looking at this going, okay, well, maybe it just mitigated because of the 8:30, the pre-8:30 high-low. The pre-8:30 buy-sell side. It took them both, right? So maybe because it took the sell side, it wicked and took the buy side, it's going to close back inside, it's going to expand long. Because my expectation is it's still going to close above. But when this one closed below, I immediately, as you could see, I got out here. I got out here. I thought to get back in here, and then I subsequently got back out. I got out here, and then I got back in here. And I took this down. And we're going to get to why I did that. So the idea was, when I felt like the long really wasn't probable, The reason I didn't think the long was probable is because I also had London sell side liquidity. We had taken a buy side in the 8:30 candle. We took the buy side. And now we're closing back inside London session. We're also closing below this candle range, right? And bigger than that, we're also doing something else. If you look at this sell side and this buy side and you treat those like a candle range, what are we also doing? We souped the buy side liquidity, then we souped the buy side liquidity again. We closed inside, we opened, we manipulated, we closed again inside, which basically said short. It's kind of screaming short. But the problem is we've already wicked through this intermediary low, which I thought was just going to be my sell side. Well, we've cleared that, right? So that's what ultimately had me say, okay. And I wasn't, what I'm talking you through now, I didn't realize until I'd already pressed buy on this candle. And you see when I finally figured out, no, that's not, this is not it. Like, this is not what we're trying to do, right? And then subsequently, when I felt like, okay, we still haven't reached this level, but we're still going short, again, my brain, not so much not wanting to convince myself or to give in and say, give up the bias of longs, but at some point, I got here and said, yeah, let's maybe. I said maybe. Until I was met with, the following two bullish candles, which said, no, we're just coming back up here to mitigate. That's all we're coming back up here to do. And then it took me four bearish candles later, and actually the opening range candle, the 930 candle, for me to go, oh, yeah, no. And I came to that conclusion because of this third bearish candle that closed back through the sell side liquidity. And at that point is when I realized, oh, well, I should have just treated this like I treated 6 p.m. opening range gap. Because you're telling me you're not interested in going high. You're not interested in going high. This is just a manipulation, right? Now it's about setting the change in the state of delivery and looking to deliver short. And that change in the state of delivery was this candle right here. So you can see that that's taken out this low, right? And then you're coming back up inside for mitigation and to clear some level of imbalance. This to a tick clears that liquidity and allows this to run short. Okay, but that's the more technical side of it. The practical side and the part that you can actually look and see is, again, from a very basic kind of standpoint, what you're really looking at is, this is London session. We came back in, we ran the buy side of London, we closed back inside this session, and we were looking to target at the very smallest. It would have been pre 8:30 sell side liquidity, which was taken before the 9:30 open. And if you wanted to be very basic and very conservative, you target the London sell side liquidity, which the 9:30 candle by itself cleared. This was the candle that, like I said, I got out of my long, and then I got into a sell, and I literally just took and said, okay, we're just going to the London low. I'm getting out. Why did I get out at the London low? Because you started seeing chop. And I know you're saying, Jeremy, it's great, all this information that you're giving us. It's wonderful. We appreciate it. But you said something about a 6 p.m. manipulation sell-side liquidity point, and you've not gotten back to that, and we've gone through a lot of information and we haven't gotten there. Patience, my young Padawan. Patience. We're getting there. We're getting there. We're getting there. As a matter of fact, we're just about headed there right now. So, you remember how we were talking about like those liquidity points? So, this is our 6 a.m. candle range high, right? This price never came back up. So we didn't really have to worry about that. And then as we get the London sell side liquidity taken out by the 9:30 candle itself, we got some, bouncing. I don't want to call it erratic, but we had basically a lot of accumulation in here, some consolidation and accumulation in here. Okay. Within this range, when the candle opened, obviously we're now looking at a new opening range. So you see this here, 1024 OR BSL, opening range buy side liquidity. Because price opened here at 9:30. This at the time was the highest wick body within the first hour. This occurred at 10 a.m., which ultimately will show you here that the 6 a.m. candle range low today was here. So the only thing that we had cleared was basically London sell side liquidity. And at 10 o'clock, we came up and we made this buy side liquidity point. This was the low. So again, candle range low for 6 a.m. is here. So we're bouncing around in here. Now, I don't call myself a betting man. This is a process of not quite absolute, but just probability. So the expectation, as I said earlier, the last time when you're looking at 6 p.m. candles, is that the following morning or the following day, usually that manipulation high or low is targeted, it's taken out. And sometimes it does not happen, but it's for you to understand that that is a future liquidity point at some juncture when price seems to be reaching for something in that way, long or short. Okay? Now, I've said that because after this accumulation in here, okay, we've set the buy side liquidity, and now we're looking to see, are we going to take out candle range high, candle range low? We don't know at this point. The expectation is we've already taken out London, so it's possible that we just take out Asia, right? Well, that's what we do here. We end up, and it's much later in the morning. This is 11:35. We get a candle closure short, and then 11:45, the dam breaks. Now, this long bearish candle closes all the way down and clears our Asia sell side liquidity. But notice it stops just short of our 6 p.m. manipulation sell side liquidity. And I'm going to zoom in here, and this is where I like to impose like the Admiral Akbar from Star Wars. And the reason that I wanted to do that here is for some people that would immediately be thinking, okay, it's taking that and it's going in the opposite direction. Well, that's good to think, because here, look at what happens. Look at what happens here. It closes. When the next candle opens at 11:50, it opens and it wicks down. It manipulates down. What's that manipulate through? Right through the 6 p.m. manipulation sell side liquidity from the night before. And I want to be clear about it. It's a wick through. So if you're just targeting, you're just looking for a target, okay? And again, I'm going to preface what I'm about to finish saying by putting it this way. And I'll put this all in view for you to look at when I say this. If you can establish the framework, the price action framework and structure that would allow you to say, I know this is a manipulation level. We've cleared the opposing side. The price action now lines up the following morning that would support a short or a long back to this point. You almost have like a win-win scenario. Now, I'm going to give you another key tidbit that will sometimes help with this probability, with this expectation. There are two things that you can align this thought process with. And here are your two concepts and the two things that you could look for when you go into your chart in conjunction with this. So when you look at that manipulation, sell side, buy side, whatever it is, okay, if you see price run overnight in the opposite direction, the one thing that you want to ask yourself that'll help you from a confluence and a price delivery standpoint is to ask yourself, am I above or below the previous day's PM session? Here's the reason why you want to ask yourself that question. If in this case, right, in this very specific case, this 6 p.m. manipulation level, okay, you see where that is, price reverted and price ran long, right? So at 8:30, we're above yesterday's PM session. If you have any doubt, now I use a lot of, as you can see, I use like a lot of rectangles and boxes. This was how I originally started trying to train my eye to go back and say, when I asked the question, okay, am I above or below? I would always, because I've not always drawn out like the 6 p.m. manipulation legs. I wasn't always doing that. What I was doing though is I would literally denote, I initially used to just denote like a horizontal ray, like any one of these rays. I would just put a ray on my chart and say 6 p.m. open, right? And then I got to the point where I would say 6 p.m. open, and I put another ray up that said 4:15 p.m. New York p.m. close. So that way I could look at where price was the following morning, and I would try to figure out, okay, is price going up at the open or is it going down? Like, what might it be reaching for when price opens, right? News notwithstanding, because that's an 8:30 thing. But when we get to the true New York Open, like what could it ultimately, after it mitigates whatever or it's shaken whatever out, where is it going after that, right? So you can always just try to ask yourself, am I above or below previous day PM session? Okay. And once you do that, the other thing that you could do is once you answer that question, you'll have a decent idea of where price might be looking to initially gravitate to, because at that point, it's trying to basically eliminate the prospect of any electronic trade hour or overnight price action, because that's really irrelevant when it comes to regular trade hours. It serves a purpose, but it doesn't serve the purpose as it relates to volatility and price delivery for regular trade hours. If you're above, if the closure is at a lower price and you're exceedingly above it at 8:30, by the time the 9:30 time frame opens, 9:30 is going to be looking to say, hey, there's a price irregularity or there's a price gap between where price was yesterday and where I am right now. It's not always going to fill that gap 100% right away. It may mitigate and do some things until it gets to a point where it's like, we're probably going to leave that open until tomorrow. Or, it's going to do whatever. But in most, that's why I said, I don't want to say most. In the cases that I've seen, you can always use that 6 p.m. manipulation level to kind of approximate, is it going to reach and target this today? Okay, great. Sometimes, if you go back and you back test it, or if you just go back into your charts and look, I will tell you that sometimes the 6 p.m. manipulation level will be reached back into and mitigated or tapped in London session. And the only thing that I can tell you about that without drawing it on the chart is if that does happen, if you get basically a manipulation 6 p.m. and London happens to reach back and clear that order, whatever the London mitigation is, whatever that low or high is for London, that is now your new target. So it's the same process that you've seen here, but if for whatever reason, let's say London rallied here and London closed below this manipulation level, whatever the London sell side liquidity is, that is now the level that price is going to reach to. So just keep that in mind. But yeah, I think this is a whole hour. God bless America. So yeah, hopefully you enjoyed the video. Give me your thoughts below. Like the video if you appreciated it. I actually had doubts on whether or not I was going to upload and go into this, but ultimately, yeah. I hope this is something that you got some enjoyment out of. Again, check out the Soup Room. Outstanding information and a lot of good quality videos there. So you guys take care. Like the video, subscribe for more content, and I'll see you next time.